GP? Oh, okay. Okay, so he bought it here, got stopped out the same day. I guess it was an okay setup, but it kind of obviously failed in a big way. Yeah, that was near the peak of the SPAC market. And you can see why it failed, because Nasdaq pulled back. You know, Nasdaq had a big run, multi-month run. And you know, you want to buy breakouts when the market, you know, the Nasdaq I think is the best index to follow, comes out of a multi-month sideways consolidation or a multi-month sell-off. Here, good time to buy breakouts. Here, not so much. And that's why it's failed. The setup itself was pretty, you know, was okay, but you know, once the market is straight up for multiple months, you gotta be careful buying breakouts. Okay, Peloton, if I see it correctly, he had an entry here. It was a good setup. It failed. But again, like, this thing was a huge laggard. Again, early February, mid-February, you tried to buy. Like, the setups themselves were okay. Actually, they were pretty decent. But, you know, you put them in the correlation with the market and you'll see, you know, it was a huge laggard compared to the market. And then the market started pulling back mid-February and everything failed. When is the best time to buy breakouts? Chat, come on. Come on, chat. When is the best time to buy breakouts? What do we want to see in the moving averages? After correction? Yeah, but the moving averages. When the 10-day is above the 20-day, yeah? More. Rising 10-day, 20-day. We want to see the 10-day above the 20-day, and both the 10-day and 20-day need to be rising. Or one of them can be sideways, but at least one of them needs to be rising. That's when you have good conditions, generally, for breakouts. Not a perfect indicator, but like in late February, the 10-day had started sloping down, the 20-day was sideways. Actually, yeah, in late February. So that was a warning sign that you shouldn't buy breakouts. Like Twitter, yeah, Twitter did look good. Like if I compare this setup, I'm gonna show you guys. You know, you just see this setup. Big move, found support on a rising 10-day, and building high tight flag. Next day gaps up, but in this case it crapped and it never went higher. Now let's look at something like NIO. I'm gonna show you. Similar setup. Fairly similar setup. For example, something like this. Big move, pulled back to the 10-day, started building a flag, and it went straight up. Why did it go straight up? Well, because the market had just come out of a multi-month correction, and that was the start of a multi-month move. And NIO had shown strength all the way. That's a good time to buy breakouts, when the market comes out of a multi-month sideways or multi-month correction. Not when the market has already run for 2-3 months straight up and it's starting to lose momentum. Not a good time to buy breakouts. Next, Corsair. If I understand this correctly, he bought it here. Again, good setup, but yeah, early February, that was near the peak of the market. And this thing had been lagging for a while. Like look at this thing. December, late November to early February. This thing went sideways. Look at what the Nasdaq did. Nasdaq went straight up during this time. Huge laggard. The setup itself was good, but again, you see laggards starting to break out after a multi-month move. You gotta be careful. Sometimes they can work, but you know, the fail rate is gonna be higher. This one I don't understand where the entry was. OEG, he bought it here. Oh, this one I already went through. Again, it was up over 1,000%. The setup itself was good, but you gotta be careful. Like these ones that are up like 1,000, 2,000% in a few months. Like they're not gonna keep going up forever. You're just not gonna get a high tight flag, a double, high tight flag, a double, high tight flag, a double for eternity, you know? The higher they go, the higher the fail rate will be eventually. Yeah, some things you have to learn yourself, but at some point you gotta get your shit together and start learning from other mistakes, because obviously you're gonna blow up in the beginning, or a lot of people do, because they have no risk management. But after a point, you can't just keep blowing up when something new comes, right? Because once you learn risk management, you can't blow up. But you can learn from other people's mistakes. Because it's the same things getting repeated over and over again. Yeah, trading is easy. Super easy. Everyone can do it. Everyone can turn their accounts from 5,000 to 80 million. No effort needed. You don't need to study history. You don't need to understand psychology. You don't need to understand how stocks move, when they move. It's very easy. Yeah, sell high, buy low. Yeah, hope and pray is a good strategy. And you can follow anyone on Twitter. The more followers they have, the more legit they are, and the more money you're gonna make. How much does fundamentals or story matter? Hard to say, but probably 50%. You wanna be in the things where money is gonna go to. That's kind of the whole point of trading. And the longer time frames, the more fundamentals matter. And when I say fundamentals, I'm not talking about like balance sheet, the margins. I'm talking about like the theme or the story. A pocket pivot is a breakout that's inside of a range. Like a good example would be like this crowd strike, like what was it, 2 weeks ago, when it's kind of, a stock with previous momentum that pulls back to one of the major moving averages, builds a little bit of a range, and then breaks out of that range. Like this was a picture perfect pocket pivot. Found support on the rising 100, started building higher lows, got tighter, and then broke out of this range on higher volume, and look at it now. And now everyone's getting excited about this being a breakout. But if you want to make money in the markets, this is where you buy it. That's a pocket pivot. Well, that's just not true. Some of the best traders are very emotional. That's a myth. Of course you can have emotions. But the key is not letting emotions dictate your behavior. You can be happy, you can be scared, you can be pissed off, and if you stick to your system, you're fine. That's yet another one of these myths people like to spread. I don't believe in it at all. You've been using 1 minute opening range highs to enter high tide flags, but the stop loss is often too big. I don't even know what to say. Look. If you think your stops are too wide using the 1 minute opening range, I have no idea what to say. I can't help you. GNK, if it's a good setup or not. I think it's a good setup. It made a big move. And now it's building a base here, building higher lows, and it's kind of getting tighter. Guys, this is a 5-star setup. It really is. Look at how orderly it is. Look how nicely it's been surfing the 20-day. Every time it gets below these moving averages, it has these wicks. Right here it tested the 50-day perfectly right back into range. Here again, tested the 50-day right back into range. This is a 5-star setup. Beautiful. Oh, groups like Atlas Crew that would pump these penny stocks. Yeah, they made their money, and now they're just gonna avoid the bag holders. They don't care anymore. They're probably gonna come back under a new name. That's how it works. Same cycle over and over again. I don't know who the Atlas Crew is, but it's just, you know, usually, you know, like the same people, and they made their millions, they cashed in, and yeah, they are, they don't give a shit. If you think some Twitter handle is gonna change your financial outlook by, you know, feeding you pics, well, think again. What's gonna happen? There's so many of these on Twitter, like everywhere. They're everywhere. YouTube, Twitter. It's disgusting, and they have an audience. And honestly, like people who follow these people, they kind of deserve it. Like they have to learn a lot. You know, they get some life experience. That's the worst thing. These are so obvious scams. Like you know, you kind of see it. Like, you know, you visit the Twitter account. Anyone who's selling anything, you can usually determine within 30 seconds if they're a scam or not. It's kind of obvious. The only thing that's gonna save you, that's gonna guarantee your retirement, and preferably a very early retirement, is education. Not following pics on Twitter.